What's going on, traders? Andrew O'Connell here with Pristine Capital. Another beautiful day in the market, am I right? Now, today was definitely the nightmare on Bull Street. Today was a very tough day of price action. The NASDAQ was down over 5% today. We had a complete expectation breaker and reversal of yesterday's bullish action. Now, today I want to preface this video by saying that if you're a trader that defines their stops and defines their risk before they take each trade, today was likely a very easy day to navigate. If you're one of those investors or traders that does not have their risk defined and they're kind of putting that off, now let's say like you got long yesterday into the strength in the action, today could be a very challenging day. Let's break it all down and let's start with our box scores. We have the S&P 500 finished down 3.55%. We have the NASDAQ down 5.04%. Huge down day. IWM small caps were down 4. Dow was down 3. And the ARK Innovation ETF, which I am currently long via calls, was down 8.93%. Almost everything closed towards the lower end of its range, but not quite on the lows. Look how extended volatility got. Just a huge bounce in the VIX. We'll take a look at those charts. And breadth was a complete washout. My trend model flipped from a +1 to a -1 in the beginning of the day, and then to a -3 as the day progressed. This really weak action, I'd like to think that this was catalyzed by very weak activity in the bond market. Take a look at what the 10-year Treasury futures did today. They got absolutely smoked. Our 10-year Treasury futures, they hit new lows before recovering slightly. So this is actually a good thing that we didn't make a new closing low. We actually remained inside of this day's range. But throughout the day, it looked pretty precarious. It looked like we were slipping into the abyss. And it was definitely not a good situation. Our 30-year Treasury futures, the ZB ticker, this actually did make new lows and it cascaded below this monthly value area. So this is a tough concept for a lot of price action traders to really wrap their head around. But the bond market is much more meaningful, significant, and just a much bigger market than the equity market. And bond yields are used to price equities. And if you have a business that has cash flows, you use bond yields to discount those cash flows. So the bond market has a direct impact on equities, and equities do not have that same relationship back where they're directly impacting bonds. So when bonds are very weak, you can get some crazy action. And to be honest, like between yesterday and today, this was essentially a pump and dump. It was a complete expectation breaker. And so it made for, a relatively challenging day. Let's take a look. Our Finviz heat map, everything got massacred. We had Apple down huge, Nvidia down over 7, Tesla down 8, Amazon down 7. Huge red action across the board. Now, if you have a super short term like goldfish brain, you might be like, oh my god, this was the worst day ever. Like, oh my gosh, the sky is falling. This is terrible. But when you put it in the context of this day that we had yesterday, overall, is it that bad? Apple's up 4.1% yesterday. Now today it's down 5.57. Google down 4.75. Yesterday was up 3.76. Overall, over the 2 days, not much has changed. But if you're anchoring on like the positive feelings and like, oh my gosh, I made so much money yesterday, and then to get this day that we had just today, that's where mentally it feels like, wow, the sky just fell. So it is important to not really anchor on like one data point, one day of price action. It's always just, what's the market doing in relation to the stops that I have on my positions? Are my stops being hit or are they not? If my stop's being hit, I need to take an action. If a stock is setting up and meets my criteria, that's where I could potentially buy the stock. But other than that, it's really important to try to remove some of those short-term emotions. Easier said than done. And don't get me wrong, when the market first opened and I saw how weak it was, I was feeling some of those same things. It took me about like 15 minutes to really get oriented and be like, wow, yesterday's price action, it's not sticking. All right, now let's move on and let's play the best way that we can given the new information that we have. Sectors, very weak across the board. We had global autos down over 5%. Solar energy basically gave it all back today. Our ARK Innovation ETF was horrible, really tough action. And our style factor showed the same exact thing. We had quality was the worst, or not the worst performing, second, or no, not even. Geez, everything was horrible. Quality was down 4, high beta was down 4.59, growth was down 4.84. So this was a massacre. The way these stocks moved today seemed very similar to what was going on during the coronavirus crash. So just to give you some perspective, this is a huge down move. Intraday, I actually tweeted out like the limit rules for when certain areas of the market actually close for 15 minutes, the circuit breakers. If any of these assets like the S&P 500, the NASDAQ, Dow, any of those, if they go down 7% intraday, that's where the circuit breaker hits the market, or that asset stops trading for 15 minutes, and then you progress from there. And I was actually looking at the limits, and for NASDAQ, I was like, geez, we might actually hit these limits. All right, now let's take a look at the price action. So now that we got that out of the way, the emotions of it all and just like how bad it was, let's go ahead and assess the technical damage, if any. So yesterday we broke inside of this monthly value area, which was great. We broke above this teal downward trend line, which was great. And we were teeing this up saying, hey, there could be a test of the 20-day moving average. We actually did not even get there. We got close, but no cigar. And the market really just started leaking lower from the pre-market on. We lost this bottom of the monthly value area. We lost the downward trend line. We lost the 5-day EMA. And so those are bad things. But then we got all the way down to these prior lows. And keep in mind, the low that we want to watch next is this 40.55-ish level, 40.60 level that we hit on May 2nd. Now it's important to note that we plunged into this area. We actually got pretty close to those May 2nd lows, but some dip buyers did come in towards the end of the session. So if I were to just look at this recent price action, and I go right here, and I take a screenshot of this, the market's just not really moving, right? It's just kind of going sideways. So from that perspective, nothing's really going on. We're right where we were about a week ago. But if you're anchoring on yesterday, horrible day. My trend model's at a -3, so I'm making sure to, I don't want to get caught just in case, for all we know, tomorrow could literally be a day where we just cascade below these lows. I mean, keep in mind the VIX is at a 31 again. So we regained a lot of the losses from the past couple days. Also keep in mind though, with the markets down so much today, the VIX did not make a new high, which is good. So there's a few like glass half full ways of actually looking at this. So yeah, VIX definitely very elevated. If you look at NASDAQ volatility, it is also pretty elevated, also did not make a new high. But it really just shows us the risks are still there. Could this be a tail event to the downside? It certainly could. So it's important to not be all in on call options, all in on risk, making a one-way bet that once you make it, you can't pivot. It's always important to be able to pivot your bets and really just, ebb and flow with the market. Let's take a look here at our hourly chart and see what has changed. On the hourly time frame, this right here is our weekly value area. Remember, when you look here, it just looks like we had a huge short squeeze and then pretty much just like a drop back to the normal range. So this, to be honest, we are where we were a week ago. That said, we're below this weekly value area. So that shows us, the strength is really to the downside and the momentum is still to that downside. Let's take a look at some of my trades for today. And let's dive in here. My goal for today was to make sure, top priority for me was make sure to trade like a professional. There should be no difference. Like if the market's up 5 or the market's down 5, you should still be following your same process. So I knew, okay, the flavor of the day today, rather than focusing on something like, okay, let's look for stock entries. Let's look to take targets. Let's look to move my stops up. You know, it's not going to be one of those days. Today was more of a day of, okay, let me play defense. Let me make sure that I know where my stops are. Let me make sure that when my stops hit, I'm taking those stops. Let me monitor the market, you know, etc. It's just like a different flavor. But the longer you're doing this, the longer you're trading and or investing, you're just going to notice that like days like today are going to happen so many times throughout your career. They're just so normal. Days like yesterday where the market pops a couple percent, you're going to experience that same kind of day so many times. So I can't stress this enough. Like, you know, it shouldn't really be like, oh, when the market's up, I'm happy on those days. And then when the market's down, I'm sad on those days. Like, it really shouldn't be that way. It's like, I put this on Twitter. It's like the equivalent of, you know, you take a boxing match and then you're upset when your opponent punches you in the face. You know, if you're a boxer, you're like, okay, I'm going to punch this guy. He's also going to punch me. When you're trading, it's the same exact thing where I'm going to attempt to make money in the market. The other players, they're going to attempt to take money from me. I have the potential to make money and the potential to lose money. So it's that same thing, like the give and take, give and take. So yeah, you just want to make sure you're pretty emotionally even keel no matter what the market brings. All right, side rant over. So what did I do today? Pretty cool. This actually worked out very well. My BXC trade that I talked about yesterday, this was a power earnings gap setup. This stock is so darn strong that even when the market was really just falling off a cliff to start the day, BXC was actually moving higher. So I closed out half of my position for $100. I had paid $88 for this position. And this is one that I just entered yesterday. So I held for about 24 hours and I was able to make like a good, 12 or 13% on this stock, which is really good, for this market. Yeah, I believe that was, somewhere between like 12 and 15, 16%. But let's see BXC. This one just still looks fantastic for all the reasons that we talked about yesterday. Look at the candle this thing put in. Absolute champ. And remember, they announced that accelerated buyback. So if the market's weak, there's $100 million of buyback flow coming into this name. So this one just still looks awesome. And again, for this one, I took my target at $100, came in a little bit. I don't have to worry about risk managing this one because it's still doing just fine. Some other names that I did have to risk manage. 10B. I also put this trade on yesterday. I stopped out of this one for $53.06. I had paid $56.66. So overall, I took this, 15, 16% winner. Then on this trade, I took about a 6% loss, which for me, my normal stop should be between 0% to 8%. Anything beyond 8% is out of my range where I want to be. So taking a 6% stop, that's par for the course. And on a day like today when the market's just so darn weak, you just have to boom, take it. I actually could have taken this a little bit quicker. So that's definitely an improvement area. When the market looked pretty weak, this thing was bouncing around for a little bit early on in the session. Yeah, I closed this one out for $56 and change. Or no, excuse me, not 56, $53.06. And it ended the day at 51.63. So that was a good stop. So yeah, it's not really like, oh, this BXC was a good trade and 10B was a bad trade. That's what I would really like to stress. It's not like, oh, the good trades are the ones that win, the bad ones are the ones I lose. The good days are the days that are green, the bad days are the days that are red. I moved my stop up on my box position to break even at $30.81 because, again, I wanted to make sure I was prioritizing that risk management. And I ended up just taking it off for $30.83. I was like, let me get these extra 2 pennies. I'm pulling this thing off. So yeah, close that one out for break even. Yeah, I guess you could say maybe that's frustrating. Man, I wish that trade had just kept going. But I'm going to be in this trading game. I plan on being in this game for another probably 50, 60 years. So I just know there's going to be another one tomorrow. There's nothing, there's nothing special about this stock or this ticker in particular. And again, I stopped out of this one for about $30.80 something. I ended up closing out at $30.24. Could I re-enter this stock if it reclaims the pivot? Absolutely. I'll actually go ahead and set an alert here just in case it does. So that was box. Closed that one out. And then towards lunchtime, I got long some NASDAQ May 20th 313 calls for $9.90. This was when the NASDAQ was already down by 5%. Said, hey, the potential for an oversold bounce is pretty good right here. This was another feature that I noticed throughout the day. The trend was over at 2 for most of the day, and the tick index was around like negative 1,000 for large parts of the day. So this was very heavy selling that was occurring on volume and really widespread across the market. So I figured, hey, if I'm doing all right today, how often do I get a chance to pick up the NASDAQ down 5% on the day? So yeah, I took that one on. We'll see what happens. We'll see if I can get some sort of like scalp or short-term swing off of that trade. Yeah, overall, just super important to keep an even keel, keep your mind open. That way you're not compromised for the next trading day and you can be objective. In terms of tomorrow, some things I'm looking at, this STER, this was from our Pristine Capital weekend watch list setup. This setup finally triggered. So I'm glad I didn't chase this thing higher. But yeah, it triggered, and pretty crazy. I had drawn these trend lines on the weekend, and this stock really is obeying this trend channel. So yeah, this one definitely want to look at tomorrow just in case the market gets a little bit stronger. And then Dave & Buster's, this is one that we talked about yesterday as well. This one did not hold the pattern, but I saw in the after hours this stock was up a few percent. So yeah, if this one re-enters that pattern, hey, maybe that's a good opportunity for an entry. That being said, my trend model's at a -3. So for now, the primary goal is just risk management, making sure I don't, lose my shirt in this market, and really just, trading like a professional. With that being said, that about does it for this market recap video. Thank you so much for tuning in. You guys are amazing. If you enjoyed this video, please like the video and also subscribe to the channel. That really, truly helps me. My goal is to get this channel to 1,000 subscribers. That would be amazing. Really appreciate you all. Have a great rest of your night.